So most likely, if you're watching this video, you've probably seen some indications in the news, talking to friends and family, with expressions of concern and worry that a recession may hit the United States. And you might be wondering, if you're looking to get into selling insurance or already selling some kind of insurance product, what kind of impact a recession will have on the insurance sales market. And the purpose of this video is to really give you my overview as an expert in the business, 10 plus years, running a multi-million-dollar agency, personally selling insurance and training thousands upon thousands of agents. What my opinion is on the insurance sales market, considering the possibility, or maybe we're already in it, of a recession occurring. So what we're going to do today is go through the litany of products that are out there and the type of markets that they support. I'm going to give you some insight with my personal experience selling those products or knowing agents who have sold those, and kind of tell you what I believe the impact of those products will have if we're in a position of going through a recession. And then what I'm going to do as I go further is kind of talk about my strategy as an agency and kind of give you my outlay as of 2022 at the filming of this, where I see my agency in the next 10 years, considering that there may be a very high chance that we go into a recessionary period of time, and what we're doing at the Ford Insurance Group to bypass that, hopefully entirely. So again, my name is David DeFord. I own the Ford Insurance Group. I train and recruit agents to sell nationally, either face-to-face or over the phone, with a focus on final expense, Medicare, annuities, and ACA under 65 health insurance. And if you'd like to learn more, you're welcome to go to daviddeford.com/FAQ. Check that out. Lots of details on the different sales and marketing systems we offer agents who join the Ford Insurance Group. Okay, so let's first talk about the products of of what's out there that most of you guys and gals are looking at as possibly selling or currently selling. And let's think about the recessionary impact that they may have on them. I'll give you kind of my opinion. So the first thing I want to talk about here are life products. So life insurance would consist of mortgage protection, term life insurance sales, also final expense insurance sales, anything where a life insurance product is sold. Index universal life is another one. So how will a recession impact the sale of those products? It's in my opinion that it's largely going to be predicated on the type of market that you sell towards. Not just the type of product per se, but the life situation that your prospects are in. For example, if you're selling life insurance products to a younger audience of people, not always, but generally speaking, the thought process behind life insurance is that it's more of a discretionary purchase. It's something that necessarily doesn't need to be done today. So for example, maybe somebody in their 30s knows they need life insurance, but they lack that urgency to buy it because they're 30. They're still invincible in their own mind. And maybe they think, I can wait a couple more years till my money gets better, and then I'll buy it then. So the point being is that with the younger crowds, generally speaking, you have more of a discretionary outlook at the purchase of life insurance. This is how I believe it just stands anyway, without a recession. But when you add in the outcomes of a recession, people losing jobs, people financially getting strapped, interest rates rising, people defaulting or potentially defaulting on their debt, credit cards, etc., the idea of buying life insurance becomes that much more discretionary. People aren't as worried about holding a life insurance policy because they think they're going to die years from now, and would rather put their money towards something else, like perhaps paying off a credit card or paying down debt. So what I believe in the recession business, or the business of a recession, the biggest impact of life insurance sales are going to be felt on those people who target a younger market, not necessarily close to retirement. So index universal life plans, the sale of term insurance, these products, mortgage protection is a big one. These are the ones I'm more concerned about selling as an agent than if I were to say sell something like final expense, which yes, not everybody buys final expense when showed to, but the prospect base that we sell to generally are disabled or retired, and they are closer to the end of their lives than the ones that are younger. And many times they've seen death, so they're already kind of preconditioned to believe that life insurance, final expense, in other words, is a necessity. So there's going to be less, I believe, attrition, loss of prospects in that older market than there will be in the younger market. Not to mention, in the older market, there is a growing percentage of the base of people that are hitting their retirement years every single day for the next decade. And that's going to impact that decision of where to sell that much more, in my opinion. Now, as far as health insurance products, I don't really see a big impact on health insurance being affected by a recession. Health insurance is very much a tangible product that most people have had long enough and know that they need, or believe that they need, and don't want to go without. Plus, with the ACA subsidy system that's put in place, a lot of people are getting a lot of help to reduce their cost of health insurance. Maybe what you'll see are selections for lower quality plans that have higher out-of-pocket maximums to help offset some of that expense. But I don't think you'll see a loss per se of the health insurance market. Needless to say, for the older folks as well who are in Medicare, health insurance for seniors, that's not going to be impacted at all either. Simply put, because a lot of the plans are zero premium plans, what we call Medicare Advantage plans. The trend and interest in that is growing precipitously, and that will probably hurry up that much more with recessionary impacts, or seniors are tightening up their budgets a little bit, and instead of buying Medicare supplements, maybe going towards a Medicare Advantage plan just to lower their monthly premium outlay. So what does this mean for the agent? In the health insurance world now, you're paid per member per household. So you're not paid a commission based off of the type of plan that you sell. The way that the ACA or CMS delegates commission payout is based not off of like a percentage commission. So maybe you're motivated to sell the bigger plan. You're going to sell whatever you can, and whatever they select, you're paid your flat monthly rate per person in the household. So that doesn't change depending on what it is they choose to buy, which means that your ultimate income is not going to be predicated by them backing off to a lower plan. You're still going to get paid all the same, which this ultimately is a good thing. So bottom line, health insurance, I don't see slowing down in interest level in the younger population or the older population at all, with the potential for a recession. And that kind of summarizes my thoughts also on property and casualty insurance. If you see any changes there, you'll probably see a reduction in benefits to lower the premiums down, but most people are required by law to have some kind of PNC anyway. I don't see any of that changing really at all. Now, with that said, I want to describe to you what DeFord Insurance Group is doing, because we live and breathe selling insurance on a daily basis. We're always watching what the market's doing. We're always watching what is going on economically. And being the owner of DeFord Insurance Group, I have a vested interest in guiding my company and my agents affiliated with me in the best direction that's going to have the least impact on their ability to be successful because of economic headwinds that are completely out of their control. So first of all, again, to stress our interest level and where we're focused on, agents that usually come to DeFord Insurance Group sell final expense insurance. And that's not going to change. The final expense market, because it's focused on the senior market, is growing in size every single day. The need for final expense is not going to slow down. And even in a recession-based environment, the good news with our final expense prospects being disabled or retired is Uncle Sam pays them a fixed income every single month that has not ever been changed, altered, or delayed since its inception, about 80 years from ago in the past. This is a good indication that even in a bad recession, that those clients are still going to be interested and still have the financial capability to buy a life insurance for final expense policy from us. If a recession occurs and it impacts anybody, it's going to be the younger group of people. It's going to be the mortgage protection type of prospects out there who may not buy houses as often as they had, who may be a little bit more tight in the budget to buy things they view as discretionary. So that's why we're tripling down on the final expense front and doing as much business in that direction as possible. Same thing goes for Medicare, as we indicated earlier. Even if a recession hits, the beautiful thing about Medicare is that the products themselves cost nothing monthly to the client. They're zero premium plans. The interest level will probably increase that much more. So we'll have that much more people going into Medicare plans if they are scared about keeping their money safe and not spending too much. And our focus is in the Medicare Advantage space. So we see, and on top of that, we also see the growth in just this baby boomers retiring that are fueling this process that much more. Again, we have that trend underlying all of this. Even in a recession, the trend's not going to change. And because these plans cost nothing to the seniors, they're that much more of an interest and that much more of a desire for them to buy. So I think in the Medicare space, if you focus on that, you're going to be a lot safer too, and likelihood that you're not going to be nearly as negatively impacted than selling like a life product to the under 50 crowd. Likewise, the ACA market, I don't see that changing as well. ACA is here to stay. I don't think the folks in Congress are going to have enough votes to get rid of it. The market has stabilized. There's enough subsidies out there to make this market, I think, lucrative now. And the way that, because it's stabilized, the carriers are now paying lucrative commissions on a residual basis. So I think it's going to attract more agents to sell it. And because the plans themselves aren't impacted by a commission percentage and the agents just paid a flat fee, I just think it's a huge opportunity to get involved with that. You know, most people at all ages know they need health insurance. And even if they opt for a less quality plan to lower their costs, if they have any, at the end of the day, you're still paid the same. So that's going to be a really good market to be in, especially with some of these exciting opportunities like the ICHRA plans that have come out for employers that don't have group plans. This is going to be a huge opportunity for those agents who recognize it and capitalize on it. And then last but not least, annuities. I think the annuity market probably is going to get even stronger in a recession, because one of the things that happen when the market starts to go sideways or go down is that seniors become scared of losing their money. And annuities become opportunities to hold their retirement without risk of loss due to a down stock market. Annuities always peak in interest when you know what hits the fan in the stock market, which is happening as we speak. So bottom line, I don't see annuities changing. And a lot of the money that Americans hold are the older people anyway, and they want to make sure what they've gained is actually going to be there their entire lives. And annuities are fantastic vehicles for making that happen. So expect there to be equivalent, if not more, annuity sales, considering this kind of recessionary fear and the fear of people losing money. So that's kind of my perspective here and what to expect. Bottom line, guys, if you're getting into this business or you're not happy where you're at in your profession and selling insurance, you really need to think about what the recession, which may come, it may not come. There's always up markets and down markets in life, guys. So you need to think about this regardless of what happens anyway, and choose dutifully what type of strategy you want to focus on so that you're not affected by things that are out of your control, like an inflationary environment or a recession, which you didn't cause. And picking the right product can make all the difference. So hopefully this was helpful to you. And again, if you're interested in joining and seeing how DeFord Insurance Group works, go to daviddeford.com/FAQ. You'll get a good rundown on how final expense Medicare annuities and the under 65 health insurance market works with us, and how our sales and marketing systems works. Thanks for watching. See ya.